3, 2, and 1.
All right. Can't use that pen because I'll write on my screen and I'll be screwed. All right.
That's no bueno.
No bueno. Happy almost Easter.
It is almost Easter.
Yeah.
Happy Good Friday.
Yeah, Good Friday.
Market was closed today.
Yeah, market was closed. I forgot.
If you haven't figured out, we're recording this on Friday.
Yeah.
It's coming out on Sunday. So we can actually have a weekend this weekend.
Right.
I'm just going to do yard work.
Yeah. Yeah, it's cold here.
It's freezing, man.
In the Northern Virginia suburbs.
70 degrees one day, 45 degrees the next.
Yeah.
What?
It is cherry blossom season, though.
It is.
I'd like to get down there this weekend. We shall see.
I just look at them on the internet like everything else.
Everybody can do that.
Let's jump into it, man.
All right. Yeah. We got work to do. All right. This is going to be a bit of a hodgepodge. We're talking about, I got a whole bunch of things to go over. They don't seem to all relate, but they're all really good. So, weekly update show, 28 March 2021. Somebody commented in the Facebook group off of our last show, and because we had talked about Warren Buffett's favorite book. It's a fundamental book, and I'm losing my thought of it already.
Didn't write it down.
The Something Investor, The Intelligent Investor.
Okay.
Can't remember who wrote it. Intelligent Investor. So somebody had commented in Facebook about, hey, if you're talking about books, how about William O'Neill, How to Make Money in Stocks? So this was William O'Neill's quote from the inside cover. You must learn to benefit from America's 100 years of super winners, says the founder of Investors Business Daily, William J. O'Neill. So this book, if you subscribe to Investors Business Daily, you'll get this. Actually, I think there's a couple of different books that you can choose from. They give you like as gifts for signing up for their service. How to Make Money in Stocks is a fantastic book, and there's also a book that I also have. It's called How to Make Money Selling Stocks Short. So not if, but when we get back to the next legit bear market, I'll pull that book out and we'll look at it.
Yeah, that's a good one.
Yeah, because the market goes down much faster than it goes up. And so if you know what patterns you're looking at, you can make a lot of money really fast when the market conditions are right, selling stocks short.
Not in the TSP.
Oh, no, not in the TSP.
This would be outside of
outside
TSP,
of TSP,
which
for sure.
Hopefully you guys watching this show have realized that we play both, right? We have our, a bulk of a certain amount of money in the TSP, and then we have, IRAs and other things that are more flexible, other investment tools.
So let me the thing about Investors Business Daily, if you don't, it's on every newsstand. I don't buy the print edition anymore. I just buy the online, of course.
I get it on the iPad.
Yeah, I get it on my phone. I get it on the iPad. What he does is he assigns a number and letter value. He basically consolidates fundamental analysis and gives it a number value, and then you take the stocks that are really high on the number value from a fundamental perspective, and you look at their charts and you apply technical analysis to the best fundamental stocks. It's really it's a fantastic newspaper.
Yeah,
and it's a newspaper. It has news and all that. It's a business newspaper. So the first half of if you were reading the newspaper version of it, the first half of it is basically news, and it's business news. And there's an opinion piece and whatever, but it's business news. And the second half of it is all technical analysis of the charts that are already fundamentally ranked.
Right.
It's awesome.
Yeah. And I was telling Jerry before we jumped on that I've been working on this technical analysis article for our site, and I'm also going to use it on our Facebook groups just to kind of so people have it as like a primer and explaining technical analysis as we use it. And one of the things we were talking about was, or that I was writing in there, was about how fundamental analysis is not some people think that we're negative against it. It's just that by and large, by the way we do this, it's not useful because we're in indexes for the thrift savings plan.
Right.
It's very useful for individual stocks or small portfolios. 100%. Like if I was a tech, if I was really drilling down in tech and needed to buy Apple and Tesla and you fundamental analysis is very helpful.
Sure.
What's great about what people like Investors Business Daily are doing is they're doing the fundamental analysis to weed it out.
Yep.
And then you can take the technical analysis and layer that over it. That's
exactly
huge.
It's huge.
So it's not that we're anti-fundamental analysis. It's a different tool.
Right. If you're only going to use fundamental analysis to try to manage your TSP reallocation,
that's going to be difficult. It's almost impossible.
Guys do it.
Yeah, you have to do it from a very macro level.
Yeah,
right?
It takes a lot of work that I can't get my mind around. So kudos to Scott. He does it. It's amazing how he does it. But I just don't see the world that way.
A lot of studying. Yeah. All right.
So
next.
Anyway, definitely check it out. It's a great site and it's a really good book. And of course, you could always subscribe and then cancel and keep the book.
No, don't do that.
Don't do that. Okay.
Up.
I said mixed because I didn't change that part of the slide. It was up. Every TSP fund was up this week. C fund up 1.14%, S fund almost 2%, I fund about 1/3%, and F fund about 1/4%. So all green, and that's good. So what are we going to talk about this week? I've seen a lot of questions, and hopefully by the end of this, for anybody that's watching, they're going to really understand what price do I get when I make an interfund transfer request. Okay, we talked last week about the 2 move per month rule and how it applied. How come we got to do 3 moves in March? But the other rule, there's really only 2. There's two moves a month, and then anything beyond those 2 moves you can only increase into the G fund. The second rule is that you have to have your allocation request, your IFT request in by noon to get that day's closing price. And I didn't think that was that complicated, but there's a lot of misunderstanding about what that means. Okay, so we're gonna talk about that. And then PIP, I didn't realize today was going to be PIP day. I thought it was going to be next week. But everybody's PIPs came out, and so we're going to do I'm going to talk through PIP and what it means and all that. Not really what it means, but we're going to look at a couple of things about PIP. We looked at Head and Shoulders on the S fund last week, and I'm going to do, and last week was all about Elliott Wave and the very long term, and short term, where we are in the market. This week, we're going to take a closer look at Head and Shoulders topping pattern, what the ideal pattern looks like, what the target would be if we did cross that neckline, and what a failed Head and Shoulders looks like, which I think the S fund is in right now, a failed Head and Shoulders topping pattern. The Nasdaq, I threw that in there because it's a great chart. The breakout that we had on Thursday looks pretty similar to the one that we had in November. It was the beginning of November. Very similar pattern, and hopefully we continue with the same kind of price acceleration that we did coming out of November last year. And then we get the ongoing AMRN saga. I bought AMRN on Monday. I'm going to show you guys where I bought it and why I bought it on Monday. And I'll just go through real quick the other times that I bought and sold it. And then we'll do the daily charts. So we're going to run through this pretty quick because we got a lot of stuff to cover. Okay. Interfund transfer rules, right? You have to have your trade request in, your allocation, your interfund transfer, IFT. All of these only apply to the IFT. They do not apply to what's called the CA, change of fund allocation. They only apply to interfund transfer. Change of fund allocation talks about the money that you have coming in every payday.
New money
coming in every payday. That you can change where that goes every day. They don't care. The rules only apply to interfund transfer,
which generally is a bigger pot of money.
Yeah,
and that's why they don't want you moving that.
They don't want you moving that
all
pot
the time,
right?
Yeah.
Okay. So if you go to the TSP site and you go to interfund transfers, this is what you'll see, and this happens to be what you'll see on mine because I pulled it up and I did a screenshot of mine. And so as of April 1st, my total TSP account balance was invested as it is below. It gives me this warning, and it says interfund transfer limit. You've already made one interfund transfer this month. Okay, it's telling me if I do another one, then any subsequent can only move money into the G fund. Okay, so I did one on April 1st. I did a reallocation and interfund transfer. So it's telling me you only get two. I've already used one, so just make sure I really want to do this second one here, okay? Because when I pulled this up, it was already past noon on the 1st. So if I had executed an interfund transfer, it would have taken effect the next business day, and that would have been my two for the month, right? So the only reason I pulled it, I didn't do one obviously, but I pulled it up just to show what it says. So you can change your fund investments by clicking Request Interfund Transfer. An interfund transfer requested before noon Eastern Time on a business day will generally be processed that night.
That's their language.
That's their language. Okay, quote, will generally be processed that night. So what does that mean? Here's where people get confused. When you request an interfund transfer, say it's 9 in the morning, and you request the interfund transfer, you get that day's closing price. What that means is you buy it. You buy it at the end of the day. You do not get the gains or the losses that happened that day. You're buying the transfer is happening at the end of that day's closing price. So if the market goes up 2% that day, you didn't get it. If it goes down 2% that day, you didn't take those losses. Okay? So I've seen a whole bunch of comments about, why didn't I get that 1.78%, which was, I think, Thursday. The S fund was up, I think it was 1.78%. And some people realized they didn't get it, and some people were like, hey, I got it. This is going to be great. And I'm like, no. The trade got executed at the end of the day.
Yeah.
You had to already own it to get those gains.
Yeah.
You didn't own it.
Right.
That's really the thing. You had to be in it to get the gains or the losses. In this case, the gains. You didn't own it yet. You bought it at the end of the day.
Regardless of what it was at, 10 a.m. when we made our move.
Right. So that's the thing. You bought it at the end of the day. You did not get the gains, and you did not get the losses if there were losses that day. Okay. Does that make sense?
As much as it can.
Yeah, I don't know what else I can.
Yeah, it's obviously, hopefully everybody understands. Not our rules. That's the TSP rules.
Yeah, it's certainly not our rules. And until you've done it a while, it's kind of hard to understand. If you got your trade in at 1 p.m. East Coast time,
yeah,
you don't get that day's.
You
get the next day's close.
Yeah, it's happened to me.
Oh yeah, it happens to everybody.
Yeah, I've missed it, and I've been like, okay, well, but and again, the way we do technical analysis, we're not as concerned about it because we see a trend that's going one way or the other, and we're not day trading. So I'm not really worried about a given day. Now, does it suck that I missed 1 point?
That's right.
Yeah, it does. It does suck. Yep. But those are the rules, and there's nothing we can do about it. So I tend not to concentrate on things I can't control.
Right.
Right? If I'm on a plane and I can't do the transfer, I wait till I get to the ground and I do it, and it's for the next day. What I'm following is the trend.
That's right.
Not the day's closing price.
That's right. Exactly right.
It's just the long term. It's the marathon. It's not a sprint.
Right.
Yeah.
It can't. And if you've watched this enough, anybody who's watched this enough and read enough of the newsletters, I need to see a big day one way or the other before I'll make a reallocation change. And so it's sometimes I call it a follow through day. Sometimes it gaps up or down through one of the trend lines. But
we need confirmation.
You need something, right?
Otherwise, you're guessing.
Right, that's right. Otherwise, you're guessing.
We're not guessing.
I don't guess.
We don't do guessing. Now, I will say, and again, this is where Jerry and I differ a little bit because he also plays outside of the TSP, but like in my IRA, I absolutely, because I can move back and forth a lot more.
Yep. No
commissions, no fees, quote unquote, no fees.
Right.
But anyway, so no, that's not how I act for that. right? And it does matter what time of the day I buy.
Right.
It does, and I'm much more in tune for that. But in TSP, it is what it is, and we got to accept it. Our goal is to grow that pot of money over a career.
Right. I mean, the goal is yes, grow the pot of money. From a technical, very short-term perspective, you want to be in the stock funds as soon as you can identify that the probability is that it's going to go higher versus go lower.
Not possibility.
Right. It's always possible. The probability, right? When you get a follow-through day, the probability is that it goes higher. To validate that probability necessitates the risk of the day that went higher. You're not going to get that day. You're not. You're not going to get the move that day. Just accept it. Okay. PIP.
The Pipster.
This is what my screen looks like, minus the our logo at the top.
It doesn't have our logo.
It doesn't have our logo, and it doesn't say the PIP. But if you go to your TSP site and you click on that question mark, this is what it'll look like. It gives you your contribution allocations in a pie chart underneath, and it says your personal investment performance PIP for the past 12 months ending March 31st, 2021 is whatever it is. Mine's 19.83%. So there is a lot of gloating going on today, and it's well deserved. People are looking at their PIP, and there's a lot of huge PIPs out there today, and that's awesome, right? A 20% PIP on any normal year is really good, right?
Yeah.
Okay. This particular PIP, because a PIP is the last 12 months, right?
And it's your personal.
Yes. It's your personal performance.
It's a weighted rate of return. You guys need to educate yourself on that. We've talked about it before. We're not going to go down that rabbit hole, but it's not the same as rate of return. It doesn't equal.
It does not equal. Keep us on there for a minute, because I just had like some kind of strange crash. All right, I think I'm back.
Yeah, we got cameras. You can talk.
Yeah.
We don't need your computer.
For a second. Let me just.
But so I will go down the rabbit hole then while you're fixing that. But the PIP is a weighted rate of return, and it's based on what's going on in your TSP account. Now that can mean that taking out loans, paying loans, lots of things that can happen that are different about my TSP account versus Jerry's, or those of you watching. Why is that important? Well, because that means it's not apples to apples. My PIP is not an apple to your PIP, right? They're both fruit, but they're not the exact same. So I don't bother to look at the PIP. I look at rate of return. That's it. And I figure out my rate of return, and that's true math. It says my rate of return is X, and you tell me what your rate of return is. Now we're apples and apples.
That's right.
And everybody in the world is apples and apples when you're doing rate of return. And then we take it one step further and say, okay, how much risk did you take on to get that? Because that's definitely not in this number. And that's always my soapbox I jump on with the PIP is, great, you had a 90% PIP because you bought and hold in the S fund for the last 12 months.
Yes.
And you got lucky.
We're going to show that in a second.
Okay.
All right.
So
I managed to get myself back on track.
And I'm happy for you that you did.
Yeah.
But
I appreciate you holding on the fort for a second.
You good now?
I'm good.
Oh, there we go.
This is the abbreviated TSP's version of how they figure out your PIP. Okay. Colin was just talking about it's the modified Dietz method. We've talked about that before. So the PIP adjusts for distorting effects of cash flow into or out of your account. That's the thing that makes the PIP different from the rate of return. It's way more geeky than I am really actually interested in. So if anybody out there is really into it, go Google the modified Dietz method and send us what you think about it. But
and at the end of the day, and this is my take, right? We're not huge fans of BlackRock. We're going to have to come up with a code name for them so they don't sue us. For those guys, for those that shall not be named.
Yeah.
I mean, they're in business to make money, and I got it, and they make lots of it. The problem is creating things like the PIP is more about making you feel good about what you did in the TSP, so you're happy. It's a placating
Yeah.
If they were serious about it, they'd give us our PIP, our rate of return, and our risk adjusted rate of return. They can give it to us. They have the data.
Yeah.
If they really cared, that's what they would do, and then you'd know exactly your performance.
You would. At any rate, so the S fund. The reason that a lot of people are very excited about their PIP is because of this. This is the chart. I took it off of the TSP site.
That's pretty.
It's great. So down here at the end of March 2020, the S fund, one share of the S fund was worth $40.43. Okay. Today, or at the end of March 2021, one share of the S fund is almost $80. So you went from just over 40 to just under 80. And what it comes out to is a 97.8% rate of return. If you were in the S fund,
and that's straight up rate of return.
Straight up rate of return, not PIP. Straight up rate of return. It's awesome. It is awesome.
Yeah.
If you were in 100% allocated in the S fund on the 31st of March 2020, you would have seen a 97.8% gain in your account as of the 31st of March 2020.
Well, then, Jerry, why weren't we in it for the last 12 months?
That's a great question. I mean, we get to choose between the CS&I and there's a whole bunch of things, right?
We know the answer. I'm just setting
I know. So what if you said, okay, that's great. This is buy and hold. Obviously, you owned it. So you didn't buy it, but you owned it down here in March 2020.
You might have bought in.
Yeah. I mean, you might have been your fund allocation might have been 100% S2, and you were buying. Your new money was going in at $40 a share.
Yep.
And then, obviously, if you were, if that was the case, and all your new money was going in, then every payday it would be going in, at a higher amount, which is fine.
Which would affect your overall rate of return.
Yes.
This is if you were 100% in on that day.
Right.
It's just giving a little insight. Sometimes I think, a lot of people, I hope, the purpose of this is that people are learning.
Yes, definitely.
Right. So if you're looking at that chart, don't miss the fact that your interfund transfer, other way around, your
fund allocation,
the new money coming in, you're buying in at those higher rates. You're still doing okay if that's happening. It's going up.
Oh, yeah,
but you're buying it at higher. So that's going to affect your rate of return.
Right.
But,
I mean, now, so as soon as how you brought it up, that's actually sort of the opposite of why they say dollar cost averaging is a good thing, right?
Mm-hmm.
Because in this case, as you buy shares of the S fund going forward, you're buying them at a higher price. So what people try to say about dollar cost averaging is that the reason it's okay for the market to go down is because I'm buying more shares while the price is less. Well, the reverse of that happened this year in the S fund. You're buying fewer shares because the price is going up. So at any rate, what if you expanded this chart by 1 month?
Dun, dun, dun.
Okay. It's not so obvious in the chart maybe, but here's what it is. We were down here at $40, right? And we're up here at about $80. So we had almost 100% return. But 1 month earlier, we were at 60. Right? If you were buy and hold back then, you took 60 to 35 is what, a 45-ish% loss. If you were buy and hold, you took a giant percentage move loss right here.
But that was just on paper, Jerry.
Yes, it was on paper. Right. Absolutely. This is all on paper. But
I point that out because we can't go into it because we already got enough stuff to talk about. But if you do your math on your own, folks that are watching this, and if you have $100 in an account, $100 in this account, and you don't take that loss, you get in and out, and you go, what it takes for that person to get back to their $100, the other person will be past that.
Right.
There's just it's math.
Right. Now a lot of people are saying, okay, great, because if you were following us. We got out like right there, and it's up on the site. If you want to go to it, it was like the alert from February 20th, give or take. We got in. I was like, it was like 50-50 F and G, something like that, right there. So we avoided this whole loss. So if we avoided the whole loss, then how come we didn't get the whole gain going back up? Well, obviously because we didn't get back in right here.
Right.
And why didn't we get back in right there? Because how did we know?
We needed confirmation.
How did we know, right?
Yeah, because look at that dip right next to it.
Yeah.
That easily could have gone down farther.
Sure. 1, 2, 3, 4.
Well, now we're getting Elliott.
5,
Yep.
right? That's what I was actually looking for.
That's it.
And I think I did get back in sometime like right there, because once we got past this high, that Elliott wave pattern had
Higher than
failed
the old
and we
high.
kept on moving.
Yeah.
So anyway, just so for a little bit of perspective, that's the only reason I'm putting this up. If you, the way the PIP reads right now, you made 100% almost on your money, and you did from this date to this date, that 1 year period, you made 98%. That's awesome. If you bring it back one more month, you go, well, really, no, not really. If you bring it back one more month, you only get from 60 to 80. So
Still great.
it's an awesome move. It's not 100%. It's like 40%.
But that would be buy and hold. And what we were talking about before we turned on the show was you've got market timing and buy and hold. There's most people understand are two strategies,
Look at it that way,
right? Yeah. And so market timing would be, I'm going to guess when the market's going up or down,
Yep.
right? That means I'm predicting. I don't know. I'm guessing. Buy and hold would be, I'm guessing that the market's always going to eventually go up.
Yeah. Or I'm just putting my head in the sand and hoping.
Well, hope and guess. You can call it what you want, right? I call it guess. I call it gambling.
Yeah.
Right, because you don't know. You don't have any data to tell you one way or the other. Right. Now, I'm not dinging folks that are buy and hold or market timing. All I'm saying is you have to accept that you walked up to the blackjack table and you rolled your dice. Yep. You don't roll dice on blackjack. What's the other one? What's the one? Craps. You rolled up to the craps table and threw your dice. Right.
Obviously, I don't gamble that much.
Yeah,
you went right by me.
That's why I didn't catch it. Yeah. But my point is, takeaway, folks, is, and again, this is all about learning. This is what this show's for. You're gambling, okay? Now, you call it what you want, hope, gambling, whatever. The point is you don't really have a lot of data to tell you one way or the other, so you're guessing. Now, what we're trying to kind of expose people to is the idea of using technical analysis as a predictor, but really what it is we look backwards, right? Yep. We're always looking backwards because we don't know what's forward. Right. All we can use is historical data to find trends and patterns, and what ends up happening is we get a higher probability that one thing or the other is about to happen. Yep. And if it confirms itself, right, a higher high, all these different things, and we go, okay, there's enough indicators, there's enough probability. It's still risk.
Yeah, definitely.
But it's a lot less risk.
Right.
And so that's how we play the game. Right. So we're not market timing. We're definitely not buy and hold. We're using technical analysis to predict,
to minimize risk going forward.
Yeah, it's really about minimizing risk. That's really what it is. So anyway, okay. I as always assuming that this is the first time somebody's watched the show.
Yeah.
And there you go.
Yep. So hopefully that puts this huge PIP day in a little bit of perspective.
Hey, good on you though if you got 100%.
Good on you if you got 100% PIP. It's the biggest PIP ever in the history of the TSP.
Yeah, and again, not to go negative again, but it is the truth. Good luck the next time you walk up to the craps table.
Yeah.
Right? Because you might go the other way.
I mean, so hopefully you saw last week's show or read last week's newsletter, and you know that we are much closer to an unbelievably historic high than we are to a historic low.
And we don't pretend to know when that is.
No, absolutely not. We're going to see it when it happens.
We're watching it, and we'll have to confirm it, and it'll hurt.
It'll hurt. There's no doubt it's going to hurt.
But we'll be out.
But we'll be out. So, all right, that's it for PIP. Head and shoulders.
Head and shoulders.
Knees and toes. Right.
Yeah, that's what I was trying to think of.
What is the ideal head and shoulders is one of the best patterns going, because when the whole pattern comes together, and the whole pattern has to come together, otherwise it doesn't work. When the whole pattern comes together, it is extremely I don't want to say predictive, but I'm going to show you a chart that shows what happens when the head and shoulders pattern really executes. This is the ideal, okay? The market is going up. You got higher highs, that's what that is. higher highs here because it had kept going from back here. You get a higher low than this low would have been. This low is higher than this one. Okay, so you got an uptrend right there. Okay. At some point, volume starts declining as price continues to rise. This is the beginning. If you're a technical analyst, this is the beginning when this high gets higher than this high, but the volume is coming down. That's the first red flag that comes up.
Ding, 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 ding.
Yeah. The second one is, while this was a higher low versus this one, this is an equal low. Okay? And that's what gives you your neckline. So now you go back and you say you've identified now, because now you have a neckline, you've identified your left shoulder. Okay? As the volume continues to decrease, you start to get your right shoulder. When your right shoulder rolls over and crosses the neckline, that's what they call the breakout. In this case, it's a breakdown.
Breakdown.
Because there's also a head and shoulders bottoming pattern, and it looks exactly like this.
Just
flip
flipped
it over. Right?
Yeah. And it doesn't always look that pretty.
No, it does not.
So sometimes it can be a little, cockeyed. It's like one shoulder's a little, well, they're going to be even, but it can be a little wiggly. It's not. It's more compressed.
There are patterns within patterns. You can have head and shoulders within head and shoulders, and it gets very complicated. But it can get.
It's usually good just to pull back and take a look at that.
Yeah. What
would you say? Like a 3 month is better for that? 6 month? Like what view on a chart is going to show you it for TSP, right? Because we're not day traders.
Yeah.
Where would you see a head and shoulders more clearly? Would you see it at a 3 or 6?
Honestly, you can see it on any time pattern.
It'll show up.
Yeah.
It's just going to show up a little different. Yeah. Almost fell.
You have to keep looking back and forth between the different time ranges, but you can see it on any time range.
Okay.
But for me anyway, what I see right away, or what I really sort of start to fix in on is when the volume starts decreasing, even though the price is increasing. That's really the first red flag that this pattern is starting to change, because what they do a good job of in this slide is they're showing you volume is increasing as price is increasing. Okay, that's generally what you want to see. And when the market's going down, price is going down, volume is increasing as price is going down, right? That's what you would expect. When price goes up and volume comes down, that's when that's like we were talking about the tide. That's when you're at like a high tide or low tide. It's churning, and something's going to change. That's the first indication that something is going to change. And so there you go. And then what happens is it hits the breakout point, comes down. A lot of times it'll come back up and test that neckline and then go down. Okay? That's the ideal looking pattern. So I hate to put up this chart because I love my friends over at SAIC, but they have had a rough couple of months. This is the current chart of SAIC. It's a government contracting company. Here's the neckline. You had a huge run higher, rolled over, no problem. Came up, you get the head here, you get the left shoulder here, came back down. This was the even low, right? So now we have a neckline. So we didn't get below the prior low, it's even. Then it comes up, it doesn't get as high as the left shoulder, and it rolls over. That's fine. It's never exact.
You can see the head and shoulders and know that the breakout's coming.
Yeah. And it did.
Breakthrough.
Breakdown, big time right there, right? And so in this case, it broke down, came back up, and it didn't just test the neckline, it went a little bit higher than it. Okay, again, it's not This was the same thing. It broke down, came back up and tested the neckline, and then rolled over. In this case, it was the same thing. Broke down, came back up, got a little bit above the neckline, and then this was a 15% gap down in one day. You know, that happens on Head and Shoulders all the time.
And
it's brutal.
In our case, if that was one of our funds, right,
Yeah.
we wouldn't be back in until we saw it keep support above that neckline. We wouldn't have jumped right back in as soon as it crossed the neckline, would we?
You mean like right there?
Right there. Would we have jumped in there? I mean, I know this is a rabbit hole because we don't. How many moves do I have left, right?
Yeah.
And all that. But I'm just saying in general,
Yeah.
like if you could get in and out, yes, you jump back in and you wait and watch what it does. But if you've seen what just happened, you know it could be a bigger breakup.
So I would tell you what I would have done, and there's no doubt in my mind I would have done it. Here's the rule for Head and Shoulders.
I like your confidence.
Yeah. Well, in this case, it would have bit me. The rule for Head and Shoulders is whatever the top is to the neckline. So this distance, you're going to get the same distance as your target drop. Okay, that's the rule. Minimum. If it executes at the neckline right there, then the minimum drop you're going to get is this distance. Okay? So if it was me and I was looking at this back then, I would have gotten out right there when it broke the neckline. I would have expected it to get down to here. When it came up and broke above the 10-day moving average line, I would have bought it. Yep. Now, I would have bought it. I would have stayed in it. And ideally, you know, I would have gotten out here when it broke back down through that moving average line.
Yeah, because it's hitting the 50 and the 10-day right there.
I mean, you know me, that would have gotten me out.
That's enough.
So probably I would have avoided this, but it would have been awful close.
Yeah.
But that you can't do that in TSP. That is a trading. You definitely could have traded this thing and made money on it, but only if you were watching it very closely.
Yeah, this is what you'd have to be doing.
Yeah.
Yeah, not whatever your day job is.
Yeah, not the day job I have almost had. So this is what it looks like in real life, and it can be really, really ugly. Now, having said that, we've already gone well beyond. Right, this line is clearly bigger than this line. So if you're in SAIC right now, is it a good time to buy it? I mean, possibly, but I'm not buying SAIC right now. Anyway, that's what can happen on Head and Shoulders. And one last thing about this, as this last few days this week, as the price is going up, the volume goes down on every day the price goes up. Not a good sign.
Not a good sign.
Yeah. Okay. I threw this in here, the Nasdaq composite, because again, a lot of people, for whatever reason, we say that the S fund is primarily tech, and it is, but it's not the same index as the Nasdaq composite index. The other point people get confused about the S fund is because the S fund is the Dow Jones completion total stock market index, I think, something like that. It says Dow Jones in the front, and people think it's the Dow Jones, right? It's the Dow Jones.
Regular Dow Jones.
No,
it's not.
Dow Jones owns the Wall Street Journal. They're a huge media company, and they have a lot of different things. It's when you say Dow Jones, it's just it's a media company that has a whole bunch of indexes, and the most well-known index is the Dow Jones Industrial Average. So when people say the Dow moved, that's what they mean, right? But it's not the only thing that exists in their world of indexes.
And it's not the one we're in.
And it's not the one that we're in.
Yeah.
So we are not in the Dow Jones Industrial Average. And for anybody who's been looking, the Dow Jones Industrial Average has been killing it for the past couple of months, while the S fund has been tanking.
Because they're not the same.
Because they're not the same. Okay. And nor is the Nasdaq. The Nasdaq is tech. It's almost all tech. The S fund tracks more along the lines of the Nasdaq than it does the Dow Jones Industrial. Okay. So I'm putting this chart up only to show that, and actually I put it up in the Facebook group, I think yesterday, only to show that back here, we had this correction on the Nasdaq. Okay. And then when it broke, it gapped up and broke through the 10-day and the 50-day moving average there. We had a big price run higher. Okay. What did we get this week? We just came off of this ABC correction, right? Not exactly the same as this, but pretty close. And we had a big gap up and a close above the 10-day moving average. So I don't have a crystal ball. I have no idea if we're going to see price do this like we had here. But that is my plan A. That's my highest probability. Okay. You get the technical indicators. I mean, we just went positive on the MACD and the histogram, and RSI took a huge move positive. And we have a lot of room to go higher, right? Because the RSI has to get all the way up here and can stay positive for a long time. The nice thing about this is the Nasdaq dug a pretty deep hole, right? It's not like if it, like up here, it turned higher and was already kind of high. Down here, we're low. We have a lot of room to go higher. So, again, no crystal ball, but I'm pretty happy with the setup here in the Nasdaq that price goes higher. And again, the S fund does not correlate exactly with the Nasdaq, but the Nasdaq is tech, and the S fund is the most tech fund that we have in TSP.
Right.
Okay. If you guys have been watching for the last few weeks, we did a bonus chart on AMRN, and the first time I bought it was right here. We had this really nice cup pattern with this as the top. As soon as it broke through that cup pattern, I bought it at around 550. It ran up, it came down and broke that. So I bought it at about 550. It ran up to almost $10. I sold it at about $8 when it crossed through the 10-day moving average line. It corrected down, came all the way back down to where I bought it the first time, right? And then it came up, and we were talking about it last week. I decided not to buy it here, and it rolled over again, hit support again right there, and popped up. I bought it on Monday right there. And you kind of can't see it. Let me zoom in a little bit. I bought it right there on that day. You can see how the top part of the wick got above the 10-day moving average. That's when I bought it. During that day, because this is not TSP, it's a stock. During that day, when it got above that 10-day moving average, that's when I bought it. It was $6.19. That's what I paid for the stock when I bought it that day. It was $6.19. Okay. So over this week, it kind of came down, one day, whatever, and on Friday it had a really nice 4 1/3% move higher, and I expect it to test the 50-day, and if all goes well, it gets back up here and does a double top, and then we'll see what happens. And the saga will continue. Okay. Last part, as always, the TSP fund charts for the week. So there's always questions about what are the ticker symbols for the individual TSP funds. There are no ticker symbols for the individual TSP funds, which is annoying for everybody. But the C fund tracks the S&P 500, which if you use stockcharts.com, the ticker symbol is $SPX. S fund $DWCPF. I fund is EFA, Europe, Asia, Far East Index, and the F fund is AGG for Aggregate Bond Index. So here's what the C fund looks like at the end of the week. Clearly, we're at a new all-time high. Had a big move, 1.18% move on Thursday. We got higher highs all the way along. We got higher lows all the way along. We're definitely, clearly still in an uptrend on the C fund. So if you're in the C fund, you're doing good. The only kind of concerning thing is we had a really nice move higher on Thursday, but it was on less volume than the day before. It could be because we're going into Easter weekend and there's just not as much trading going on, but it's always better to see prices go higher on increasing volume rather than decreasing. Other than that, technical indicators look awesome, and we're at new all-time highs. You can't really ask for much better. S-Fund. This is basically the same chart as last week, except we had, these couple days worth of price. And as you can see, what it looks to me so far is that this is going to be a failed head and shoulders topping pattern. So the reason it's failed is because if it was a successful head and shoulders topping pattern, it would be coming down here at a minimum down to something like that, right? Because we just talked about that. But we never got a break in the trend line or a break in the neckline. Okay, it hit the neckline and moved higher this week. So the pattern is actually in play until price gets above the right shoulder. Once it gets above the right shoulder, then this whole pattern is out. Okay, but until that happens, it's possible. I'm going to say it's not my plan A, so it's not probable, but it's possible that we come up or whatever and roll over and come down. And that's still a legitimate head and shoulders topping pattern. It's a two-headed head and shoulders, right? Because now this is head one, this is head two, and this is the right shoulder. And if you Google it, there is such a thing as a two-headed head and shoulders. So it's possible. It's not my plan A. Okay? We got the C fund moving higher, the I fund about to break out, and the S fund moving higher off that neckline. I wouldn't bet against this right now. So what happens if the head and shoulders pattern fails? What could happen going forward? The price comes up, say it comes back down and hits it again. Comes back up. So now what do we have? Now we have what used to be a head and shoulders is now a sideways consolidation. Right? The pattern is different now. That's all that we do here. It's backwards looking, and we take what the market gives us at the time and make decisions based on the information we have at the time, and then we adjust. And that's what's going to happen with this. If this is a failed head and shoulders pattern, the price will come up because we know there's resistance in here. So it's going to come up, it'll hit it, it'll come down maybe, and once it gets above this point, now we're out of this pattern. Whether you call it head and shoulders or horizontal consolidation or whatever, we're out of this pattern here and we're going higher. I'm not saying that's going to happen. I'm just saying if it did, that's what would happen. Does that make sense?
100%.
Okay, good. iFund hasn't changed too much from last week. I think this is pretty much the same chart we put up last week, except Thursday had a really nice move higher, but it still hasn't gotten above this top.
Would we call that a backwards megaphone?
It's a triangle.
Okay.
It's a triangle. Triangles are great because ordinarily the breakout continues the former trend. So if the trend is up here and we get a triangle, more often than not, it continues higher. Right? So if we had a pattern that came down like this and we got this triangle, it would more likely break to the downside. Right? So again, it's probabilities. As soon as it breaks through, the iFund will be in a less risky place. And since we've already talked about how the ratio of the iFund to the C fund seems to have bottomed. We put up that ratio chart a couple weeks ago. I'm really watching the iFund closely because I think over the next 6 months to a year, the iFund is going to outperform the CNS. But that's me and my crystal ball, and I'm not trading on it yet because I don't trade on a crystal ball. I'm just watching for that to potentially happen. Last but not least, the F fund. We've been talking about this for the last few weeks because it's a great example of Elliott waves. So we have a 1, an A, B, C for 2, and we got a 1, 2, 3, 4, 5 for 3, and now we're in this ABC. Friday we had a big move up for the F fund. A third of a point move is a pretty big move higher. This 4 section right here, from a time perspective, is pretty close to the 2, and they're usually symmetrical. Symmetry is a big deal in charts. So since this is basically the 2, and this is basically the 4, I really am looking for the 5 to start coming down on the F fund. And what that means is, since we all know that interest rates in the big scheme of things are going higher, there was a lot of kind of in here, a lot of fear that because rates were going higher, and that's why the F fund was going down. We had a little bit of recovery from that over the last few days, but I am expecting actually rates to continue to tick higher, which would kick the F fund down to a 5. Once it gets down here, then we'll bottom out a little bit, and then we should have, either an ABC, which would be bad because then we continue down, or we could be at the bottom of the bottom, and then we could have a 1, 2, 3, 4, 5 back up here. But we'll see. The pattern is great, though. It's a really, really good example of how you can use Elliott wave to make decisions going forward.
Questions?
That was quicker than I expected it to be, just because there was so much stuff in there.
Yeah, there always seems like a lot of stuff to you because you wrote it all.
Yeah.
Actually, speaking of trends and patterns, we're back on our trend, which is to be just below an hour.
Excellent. Yeah. Perfect.
So we're back on. So last week, if you guys missed it, it was a long one.
It was
We'll try not to be that long. We try to keep it right at about an hour, maybe 45 minutes to an hour. That's a lot more consumable for most people.
Yeah.
I think we don't want to be all Joe Rogan and go for 3 hours.
No, I can't even watch Joe Rogan for 3 hours. No. I love the guy, but holy, can't do it. Yeah.
All right, guys, hope you got a lot of information this week. If you liked the show, please share it with your friends. Again, this comes out every Sunday at 6:30 p.m. on our Facebook page. Comes out a little later on our YouTube page and gets popped over to the Facebook group. So it's a little behind, but they're both there. Eventually, we'll get it synced. It's just the way we have it going on YouTube and Facebook at the same time. It's a little weird. But
one thing we should just throw out there as a little add-on if anybody's still listening. We did put up a closed Facebook group
for members only.
For members only this week. So if you are a subscriber to the site, the group is there so that you can feel free to talk about anything you want.
Alert allocations and all that stuff that we don't normally want people to talk about in public because you're paying for it.
Right. It's not a question and answer group. It's not like hey, hit us up with questions. It's not that. It's not the billboard like to ask us stuff.
I'm going to say right now that there's a double-edged sword to answering those questions. When people say, "This is my situation. What should I do?" Whatever it is, and we get it a lot. Here's the problem, folks. It's not that we don't want to help. One thing is a legal thing. Yeah. If we go too far, it's considered investment advice, right? That's investment advising. We don't do that in this capacity. This is a whole different thing that falls within. It's called the newsletter exemption. Yeah. We send out a newsletter. We give information. We do not tell you what to do.
With your money.
We tell you what we do with our money.
With our money, not yours.
Now, so when you ask us that, we have to politely say, I don't know. Because I don't know your personal circumstances. We didn't sit down and go through your portfolio of everything, and we're not gonna. We can't.
Now we can do coaching calls.
Now, and that's still a little different. You're still not going to get investment advice. What you're going to get is coaching, meaning like, hey, you tell me your situation. These are some options and things, but we're not going to say this is what you should do. Right. We're not going to write a financial plan for you.
Right. Absolutely right.
That's not what this is about. What we're mainly concerned with is educating you guys to do it for yourself. and then using people like us to validate your decisions.
Yep.
Because it's always nice to know, hey, did I get the answer right? Are we close? But you want to be able to have control of your financial future, particularly with this retirement piece. So the closed group.
Yeah, the closed group I think is going to be great. It's going to address a lot of different things that people have had issues about in the past. To go back to what you said, which is totally true. A lot of people, and it seems like a reasonable question. I got 5 years left until I retire. This is my allocation. Should I make this move? And I can't answer that for you. And so if somebody does answer that question for you on Facebook, I mean,
don't
be very suspect.
I won't say don't listen, but I probably wouldn't.
I mean, I wouldn't just do it. I wouldn't act on that based on what somebody says.
And we know people do.
Yeah,
we see it, and I'm amazed at sometimes the faith that people put into an unknown person's opinion
in a Facebook group.
Yeah. Now I got amazing. It. We're just a couple of guys on a YouTube channel, right? I got it. But we've been doing this a long time, and Jerry's been doing it for a very long time. And even more importantly than that is if you back up our track record, the credibility is there. The consistency goes back to what we were talking about with the PIP. Great. You got a 90% PIP this year. What'd you get 4 years ago? What'd you get 5 years ago?
Right.
What do you think you're going to get next year? When you look at our PIPs, and we're putting all that performance stuff up, but it's consistent.
Yep.
It's consistent. And that makes us sleep well at night because we go low risk and we have consistent returns. That is what most people, generally speaking, want out of their investment portfolio.
Yes.
I want to sleep well at night, and I want it to move up.
Yes.
Right?
Yes.
I don't need 90%. I'll take 15% every year for the rest of my life.
Yeah.
And I'm beating 90% of the people out there.
Yeah.
Right? Hell, if I'm getting 10%.
Yeah, you're doing good.
I'd much rather have 20.
Yeah.
I'd much rather have 20. And that's what I work towards. That's my goal. Is 20% each year. But that's very hard to do. All right, we've gone over an hour now. No, we're still under. We're still under. All right. Well, we got to say goodbye, folks. Right. Hope you enjoyed it.
Have a good weekend.
And cue music. Boom. Let's cue outro. And we'll stop talking.